Welcome back to the channel, everyone. Today, we're uncovering the truth behind CONY, the YieldMax Coin Option Income Strategy ETF. A fund promising massive income from one of the most volatile assets in the world, Coinbase stock. Is it a brilliant income idea? Or just too good to be true? Let's dive in and separate the hype from the hard facts. Let's start with the foundation. CONY is part of YieldMax's Option Income Strategy ETF lineup, which includes funds like ULTY, MSTY, and APLY. Each one uses a synthetic covered call approach, except instead of holding the actual stock, it holds a combination of options on that stock to generate yield. Specifically, CONY tracks the performance of Coinbase, ticker, COIN, through a structure that uses long call options to mimic Coin's upside exposure, short call options to generate premium income. This creates a monthly or even weekly yield payout to investors, often advertised as high income potential with exposure to popular names. Hello viewers, if you are enjoying this content and you do not want to miss future videos filled with even more tips, tricks, and inspiration, hit that subscribe button now to stay tuned with us and remember to comment and share. So, what makes CONY stand out? It's not a traditional equity ETF. You don't actually own Coinbase shares, instead, you own derivatives exposure to it. That means, you can earn income even when Coinbase trades sideways. You avoid some of the massive volatility of directly owning coin. You may still capture limited upside in bullish runs, but here's the catch, and it's a big one. Because of its synthetic structure, CONY can underperform badly during massive coin rallies. Example, if Coinbase stock jumps 40% in a month, CONY's capped upside means you might only see a small fraction of that. YieldMax's strategy relies heavily on option premiums. Here's the simplified version: they buy call options on coin for exposure. Then, they sell short-term call options against that exposure, creating consistent income. The difference between the premiums and the cost of the options generates the distributable yield. It's a smart, structured system, but it depends on option market conditions, volatility, and Coinbase's price movements. When volatility spikes, premiums go up, meaning higher yields. When volatility falls, so does income. Let's talk about the number everyone wants to know, the yield. As of recent data, CONY's annualized distribution rate has been reported between 40% to 60%, depending on coin's volatility. Yes, that's eye-popping. But before you get too excited, remember, these are not guaranteed dividends. They are option premium distributions, which can vary wildly month to month. Important. The fund may distribute a large amount of return of capital, meaning you might be getting your own money back. Now we get to the truth investors need to hear. CONY carries significant risks that every investor must understand. Capped upside, you won't benefit fully from major coin rallies. Option decay, if volatility drops or coin trends flat, income could dry up fast. No actual stock ownership, you don't get Coinbase dividends or voting rights. Tax complexity, much of the income is considered short-term capital gains or return of capital. Extreme dependence on Coinbase, if coin crashes, the entire strategy suffers. And because Coinbase is tied directly to crypto sentiment, CONY's success depends indirectly on Bitcoin's price, cycles and trading volume. Let's put CONY in context. Compared to ULTY, Tesla strategy, or APLY, Apple strategy, CONY is the most volatile, because Coinbase trades like a leveraged play on crypto. While APLY and PARC might yield between 25 to 40%, CONY's payouts can swing dramatically. One month it's 8%, the next it's 3%. So, while CONY might look like a passive income gem, it's actually more of a speculative, high-octane income tool. So, who should even consider CONY? It's not for conservative investors looking for stable dividends. CONY is better suited for income-focused traders comfortable with high-risk crypto believers who want exposure without buying coins, short-term income hunters who can actively monitor results, but for retirees or passive investors, CONY might simply be too volatile and unpredictable. So, is CONY too good to be true? Here's the verdict: the income potential is real. The risk of capital loss is also real. This is not a set-it-and-forget-it investment. If you treat CONY as a short-term tactical income play, it can be exciting. If you treat it like a stable dividend fund, it could disappoint you quickly. And that's the truth about CONY, the YieldMax Coin Option Income Strategy ETF. It's innovative, it's complex, and yes, it's risky. But for those who understand what's under the hood, it can play a role in an income-focused, high-risk portfolio. If you found this breakdown helpful, hit that like button, subscribe, and turn on notifications so you don't miss the next deep dive on high-yield ETFs. Thanks for watching, and as always, invest smart, not emotional.